Actually take this discussion forward with Hemal Thakkar, who is a senior practice leader and director at Crisil Intelligence. He's with us on the show. Hemal, thank you very much for joining in. So from a market perspective, there's a big relief rally playing out on all kinds of stocks. OEM, exporters like Tata Motors, which obviously see US as a big market, as well as the ancillary companies. What did you make? I mean, right now we're only guessing, right, till there's a formal order. What did you make of President Trump's statement that I think the auto companies need more time till they can make here, as in make in the US?
Yeah, of course, auto companies will need more time till the time they make in the US. And US has been largely dependent on Canada and Mexico, which are its neighbors, and other countries, from an import perspective, including the likes of India and China. If you look at it from India's perspective, almost 30% of India's exports are to US. So to that extent, it may get vulnerable. But I don't think, supply chains can be built overnight. It'll take time. This is more of a structural shift, even if it has to take place. So at this point of time, I say we'll be on level playing field, and we may possibly not see much of an impact, in our exports to US, at least in the near term, is the sense that we are able to.
Okay. So, this relief rally that we're seeing within stocks, is it well placed? Because again, in all the tweets, he also reiterates that eventually it all has to be made in America. But obviously, I think he's also finally realizing that supply chains don't move overnight. So do you see the Indian auto ancillary space remaining fairly insulated, considering the on-ground realities?
Yes, at this point of time, structurally, it seems that we are going to be fairly insulated. I don't see much of an issue. I would see US continue as one of the largest market for us as such. And, kind of the exports will not get impacted to a great extent. Because if you also look at, the statements that the President Trump has been making, it seems that India may possibly stand at an advantage as compared to the other peers, barring, the likes of Mexico and Canada, for that matter. So India may stand to gain. And also, if you see in the last 3 to 4 years, we have had significant increase in share to, US as compared to what it is today. So from that perspective, it's going to be a positive to India. And also, if you ask me, the cost and the quality, kind of combination that India can provide to US at this point of time, which is very much acceptable by most of the large OEMs there, is something which may not be, a competition from other markets as such. So I think India will definitely stand to gain from that perspective.
Hemal, what is the risk to this view? What's the argument if we can approach it from the other side?
What is the risk to the? Sorry,
what is the risk to this view that India largely benefits? Go on.
So as Surabhi said, supply chains, if they get rewired overnight, or if there are tariffs which are relatively lower on China as compared to what it is for India, then, you may see India being at a risk. But till the time we are better off as compared to, our counterpart, I think we are, in a much better position, because the only option that US at this point of time would have apart from India would be Mexico and Canada, for that matter, apart from China. And if Mexico and Canada are also at a level playing field or a little better than us, but still the kind of volumes that they need, they will definitely need India to support the auto OEM industry that is there in US.
Hemal, just a very general question. I don't know if there can be a clear answer to this or not, but assuming that some level of tariff will eventually come in, maybe not right now, maybe 2-3 months later, whether it's 15% additional tariff or 20% additional tariff. I mean, India's original number was 26%. So let's see, 15-20%. Maybe if that does become a reality, do auto suppliers and component suppliers, do they have enough margin cushion to digest some of it? Or will all of it have to be literally passed on to the end consumer, and then we deal with demand fallout as it happens?
Yeah, both could happen, Surabhi. I'm not trying to give you a politically correct answer, but today most of the auto component companies are having margins in the range of about 10 to 16%, depending, on the segment to which they are catering. So the EBITDA margins are in that range. So from that perspective, they will definitely have some cushion, wherein they could absorb a little bit of increase and pass on the remaining to keep the demand active. But as I said, what I still believe, or what Crisil still believes, is that, we are in a much better position when we look at our counterparts. So what sense we are getting is, we'll probably be levied relatively lower tariff as compared to, the strongest competitor that we have will be in the name of China. So from that perspective, if we are relatively better positioned, I think we should be in a position to pass on the, kind of increase that we have because of duties, and should be in a position to protect our margins.
So since you're saying that the only real threat is from China, and
Yes.
going by nomenclature and the language of the social media posts, where President Trump is calling China the biggest abuser, I guess we're okay. We're in an okay space. But let's see. This is a fluid situation. Yes. Every day you wake up to something new. But thank you for weighing in on the situation as it stands today, that perhaps Indian auto component companies don't have too much to worry about at this point in time. Thank you for that. That's a Crisil view coming in.